Hi friends, welcome you all. I am Sundar from Symphonia Wealth. So the budget 2023 is out and there are a lot of things to look for an investor. Of course, there are many announcements and there are many things which have been spoken about, but I wanted to focus really on what will impact you and me when it comes to budget. So when it comes to personal income tax, of course you all know that you would have read that there are a lot of changes and there is a lot of debate between the old regime and the new regime. So we can actually try and answer on the personal income tax on two angles. One is how it will impact you on the saving side, how you should select whether you should opt for a new tax regime or an old tax regime. So these are the broad things we will see in the next couple of minutes. So first, when it comes to savings, there has been a lot of media hype about the government is pushing you towards not saving and things like that. I will just put the phrase as the ball is in your court. So as people who've been in the investment business, we've all been saying that never invest on a product because it gives you a tax saving. I think the government has actually put that point very clear and very strong. So let me explain that. So when you are making any investment, the objective of the investment should always be to make higher returns and basically to beat inflation. But most of the times the investors actually invest because something gives you a tax benefit. So if you are an investor who is investing forcefully just to avoid tax, I think this budget is definitely disincentivized for people who have not been good savers. Assuming you are a good saver and your objective is to beat inflation, I think you will still have to save money, because whether you save tax or you don't save tax, actually it is immaterial, because you will have to create wealth for yourself so that you can actually survive in the long run. So if you are a person who needs some kind of a push to make saving, I think you need to be really cautious, because now the push factor is a little less. So you need to be really conscious about what you are doing, so the ball is actually in your court. So let's go to the second part. How do you determine whether the new tax regime is better or the old tax regime is better? So I have shown you the chart with the latest slabs of both the old and the new. Of course, from our old tax regime, actually there has not been any change. So we can actually move on to the new tax regime. So the most debate which is happening today is, should you move to the new tax regime and what happens to your old investment? And just because the new tax regime looks very attractive, should I actually stop all my investments and the deductions which I was claiming? To answer that, I have shown you a very interesting chart again. So if you have been claiming a lot of deductions through your company, could be HRA, could be you have already borrowed a housing loan and you are actually claiming a 2 lakh rebate. Apart from that, you are also a good saver, trying to capture all the exemption limits available under ATC, ATD and other things, then there is actually no major difference between the old tax regime and the new tax regime. So you will have to actually sit with your auditor and understand which will suit you the best, instead of just going by the flow saying that the new tax regime is much better. So if your deductions are very high, I think you should definitely sit with your auditor and understand and choose the right option, because if you are actually claiming a lot of deductions, maybe the old tax regime could still be better. On the other hand, if you don't have any loans, you don't have a housing loan, or you don't have a HRA limit and you've not been saving much, then definitely you can straight away switch to the new tax regime, provided your income is upwards of 8 to 10 lakhs per annum. So because you've not been saving and you've not been claiming any deduction, so it becomes a lot more easier for you to migrate to the new tax regime. More importantly, what is important is the compliance part. So as individuals, whenever there is tax time, more than the investment itself, people actually run helter-skelter to actually get the documentation, upload it with the HR and then give it to your auditor and things like that. So all this actually create a lot of panic among investors. So if you want to have a plain simple regime with lesser compliance, I think the new tax regime definitely scores better. Also, if you are not claiming too much of deductions, naturally your new tax regime looks much better. But I would really request you all to sit with your auditor, understand your deductions, understand what suits you best, and take a very informed decision instead of somebody saying that the new tax regime is much better. So apart from the income tax itself, there are other few things which are very relevant to an investor. So if you are a senior citizen, your senior citizen savings scheme limit from 15 lakhs have actually been increased to 30 lakhs. So it's a big relief for many senior citizens where they can actually park a larger amount of money and actually be comfortable with their saving. The next thing is the monthly income scheme, where earlier if you are investing at a single name, then you had a limit of about 4.5 lakhs that has been increased to 9 lakhs. And if you are investing under joint, from 9 lakhs it has been increased to 15 lakhs. Again, very safe investment. Also, there is a new savings product specifically for women, which is called Mahila Saman Savings Certificate, where you can invest up to 2 lakh rupees for 2-year period, where you will get a 7.5% per annum. Apart from that, some very interesting announcement when it comes to investor protection fund. So there are a lot of unclaimed dividend and share certificates which are lying, and to claim that there is a lot of documentations to be done. But this time they are actually going to launch an integrated portal whereby recovering your unclaimed dividend and shares and other sort of investments would become a lot more easier, and most importantly it will be digital. So which will make a lot of investors' life easy, because the unclaimed dividend and the shares are actually large in numbers. Also, a major announcement on the insurance side. There are two basic type of policies. One is a saving type of a plan and the other is a unit linked plan. So the new rule says if you are going to invest on a saving based plan, if your premium is more than 5 lakh rupees in a year, starting 1st April 2023, the proceeds whatever you are going to get is not going to be tax free, it is going to be taxable. So there is a lot of saving products which are available in the market. Generally those actually give you returns in the range of about 5 to 6%, but under the name of guarantee and under the name of tax efficiency, there are a lot of insurance products being sold in the market. So this move will actually help. A lot of mis-selling generally happens under the ambit of tax-free returns, and it will also help save a lot of investors' interest. And this rule is not applicable for ULIP policies. This is only for the traditional plans. So apart from that, there are a lot of other very good things when it comes to the budget. The first major thing which most spoken about is the 10 lakh capex expansion which the government is willing to do the coming financial year. Especially when the whole world is going through a recession and a lot of uncertainty, I think the government has taken the huge step of actually spending from their pocket, that too in a large size, which will actually help a lot of other allied industries to benefit. So the budget has actually focused on various things, right from infrastructure, personal income tax, ease of doing business. Doing KYCs will become a lot more easier. It is already easy, but it will become a lot more easier. Affordable housing, automobiles, and there are a whole lot of things. And more importantly, the budget is more like a visionary document where it is actually focusing on the next 25 years of India growth story, so that we are actually getting prepared in terms of setting the right ecosystem so that we can actually achieve a larger growth in the next 25 years. Another important thing which we need to focus on the budget is whether your deficits are actually coming down. There is a good trend where the deficits for the Indian government is actually coming down. So I have shown you some data which will help you to understand that the incomes are actually going up and the deficits are also coming down. Of course, still a lot of room to get this better, and the finance minister is also assured that they will keep a watch on the overall fiscal deficit and they will actually bring the fiscal deficit number from the current 6.4 to 4.5% in the next couple of years. So hope you got an overview of the budget. Of course, there are so many things which are spoken on the budget. But when it comes to your personal income tax, take a very informed decision. Don't just jump whether to choose a new regime or an old regime. Try and understand what suits you better and take a very informed decision. Thank you for watching.